This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Inflation held at 2.7% in both November and December 2025, stuck above the Federal Reserve's 2% target. President Trump imposed sweeping tariffs throughout 2025, with the overall average effective U.S. tariff rate rising from 2.5% in January 2025 to an estimated 27% by April, the highest level in over a century. The Trump tariffs amounted to an average tax increase per U.S. household of $1,000 in 2025. Nearly all the cost of Trump's tariffs were being paid by U.S. importers, not foreign suppliers as Trump claimed. And in many cases, importers passed those additional costs onto customers in the form of higher prices. By January 2026, economists were watching closely to see whether tariff impacts would accelerate inflation or whether broader price pressures would continue cooling. On February 13th, the Bureau of Labor Statistics reported that the Consumer Price Index rose 2.4% in January from a year ago, down from 2.7% in December and below the 2.5% forecast. This marked the lowest inflation rate since May 2025. Core CPI, which excludes food and energy, eased to 2.5% annually, its lowest reading since April 2021. On a monthly basis, the CPI increased 0.2%, while core gained 0.3%. Price pressures eased notably in the energy sector, with gasoline prices falling 7.5% annually, while inflation slowed for shelter, which rose 3% compared to 3.2% in December. Food inflation remained elevated at 2.9% annually, with beef prices up about 15% and coffee prices up 18% due to supply constraints. Tariff impacts were evident in prices for various imported goods, particularly durable goods like furniture and appliances, but the pass-through remained gradual. Then, on Friday, February 20th, came a bombshell. The Supreme Court ruled 6-3 that Trump's IEEPA tariffs were unconstitutional, striking down the vast majority of his reciprocal tariff agenda. Chief Justice John Roberts delivered the opinion, stating that to justify the extraordinary tariff powers, Trump must point to clear congressional authorization. He cannot. The ruling could require refunds totaling $175 billion to businesses and consumers who paid under the higher rates. Hours after the Supreme Court decision, Trump said he planned to impose a worldwide tariff of 10% using Section 122 of the Trade Act of 1974 totality. Section 232 tariffs on steel, aluminum, vehicles, furniture, and semiconductors remain in place even after the Supreme Court ruling. Inflation is finally cooling, but the tariff landscape just dramatically shifted. The Yale Budget Lab estimated that the cost of tariffs to the average household will drop by about half in 2026, to about $600 to $800, due to the Supreme Court ruling. However, the remaining Section 232 tariffs mean the consumer burden doesn't fall to zero, and the bottom tenth of households by income would still lose $430 due to remaining tariffs in 2026, about 1.1% of their after-tax income. Businesses built up massive inventory stockpiles in early 2025 to get ahead of tariff increases, which helped soften the blow. But as those stockpiles ran out, businesses started purchasing goods with higher tariffs, and many are now passing costs on to customers at the start of 2026. The trend is modest relief from inflation, but uncertainty from replacement tariffs and refund questions keeps the outlook cloudy. If you're buying groceries, gas is finally affordable again, down 7.5% from last year. But beef, coffee, and eating out remain expensive. Shelter costs are rising more slowly, but at 3% annually, they're still above the Fed's target. Utilities like natural gas remained elevated, up about 10% annually in January. The Supreme Court tariff ruling could mean future refunds if you or your business paid tariffs under the now invalidated IEEPA rules. Tariff bills are computerized, and it would be relatively straightforward to identify which payments would be eligible for refunds. But it's unclear what the ruling means for potential tariff refunds that the Trump administration may have to pay to businesses and consumers. Items with low profit margins, including groceries, may be among the first categories to see price increases later in 2026 if Trump's replacement tariffs take effect. Goldman Sachs economists estimated that tariffs caused inflation to increase by 0.5 percentage point in 2025 and anticipate inflation will increase by 0.3 percentage point in just the first 6 months of 2026. The bottom line: your grocery bill might stay elevated, but energy costs should keep falling unless oil prices spike. The February CPI data is scheduled to be released on March 11, 2026 at 8:30 a.m. Eastern Time. That report will show whether January's cooling trend continued or if replacement tariffs and seasonal price resets pushed inflation back up. Also watch for announcements from the Trump administration on the exact structure of replacement tariffs under Section 122 and Section 232. Treasury Secretary Scott Bessent said the administration will leverage Section 232 and Section 301 tariff authorities that have been validated through thousands of legal challenges, and Treasury estimates using these authorities will result in virtually unchanged tariff revenue in 2026. If that's true, household costs may not fall as much as the Supreme Court ruling initially suggested. The Federal Reserve's next meeting is March 17th to 18th. If inflation keeps cooling, rate cuts could finally arrive by summer. But if replacement tariffs push prices back up, the Fed will stay on hold, keeping borrowing costs elevated for mortgages, car loans, and credit cards. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.